So good afternoon, ladies and gentlemen, and welcome to today's joint webinar between the Tanzania Institute of Bankers, the TIOB, the Uganda Institute of Banking and Financial Services, the UIBFS, the Kenya Institute of Bankers, the KIB, and the Chartered Institute for Securities and Investment, the CISI. My name is Kimasha Getao from the CISI, and I'll be your host for this webinar. And for today's theme ideally will revolve around building a framework of appropriate integrity and ethical practice within financial services. And just a brief before we begin. Honesty and integrity are key to good corporate behavior and a firm's reputation. And in turn, reputation and integrity, basically the integrity of a financial institution, are major factors in its competitiveness and success. And additionally, firms need staff with high levels of integrity who take pride in their performance, are professional in their approach, dealing with clients, etc., and demonstrate high levels of honesty. In short, one absolute truth we can take home is that whether you're a bank, a mutual fund, a financial leader, your success depends on having a strong moral compass as a foundation. Such is the importance of integrity and ethical practice within financial services. And the key questions we'll be asking ourselves today: what are the key challenges and hindrances that firms in financial services face in their drive towards appropriate ethical practice? And what are the experiences in this particular area across East Africa? We'll be hearing more from the panelists about this. And how can firms build an efficient and effective ethics and integrity framework where they work in their institutions? And a host of other questions as well. And to discuss these issues further and bring out that critical and desired learning objective, we'll be joined by a very knowledgeable and experienced panel, starting with Professor Musa Juma Assad. Now, Professor Assad is the former Controller and Auditor General of the United Republic of Tanzania and the current chair of the Board Audit Committee at First Community Bank in Kenya. He also chaired the board of the National Bank of Commerce, NBC Limited, for a period of 6 years. Additionally, he's also an associate professor of accounting in the Department of Accounting at the University of Dar es Salaam. He has authored and published several books and journal articles and won numerous academic awards within his field. Professor Assad is a certified professional accountant, a CPAT actually, who holds a Bachelor of Commerce Accounting from the University of Dar es Salaam, a professional diploma in accounting, and an MA in financial control, both from Dublin City University, including a Doctor of Philosophy in accounting from the University of Southampton. Welcome, Professor Assad. And next up, we have Goretti Masade. So Goretti is currently the Chief Executive Officer of the Uganda Institute of Banking and Financial Services, or the UIBFS as it's commonly known. Prior to this, she held a number of leadership positions across various companies, including business marketing and communications consultant at More Limited, Director of Nutrial Limited, Deputy Director, Marketing Communications and Sales at PACE, Uganda, President at Public Relations Association of Uganda, Head Corporate Communications and Product Development at Orient Bank, Uganda, and Head Corporate Communications at Global Trust Bank. Goretti is an experienced director who has demonstrated a history of working in banking, FMCG, conservation, and public health as well. Throughout her career, she has demonstrated good skill in advertising, media relations, corporate communications management, and marketing. Goretti holds a professional postgraduate degree in marketing from the Royal Chartered Institute of Marketing, UK, and a bachelor's degree from Makerere University in Food Science and Technology. Welcome, Goretti. Next up, we have Kevin Moore. Kevin Moore is a Global Business Development Director at the CISI, with the responsibility for business development and strategy development globally. He works closely with major CISI clients and members internationally and is responsible for the innovation of CISI services, aiming to improve professional standards across the globe. Kevin joined the Institute in 2007 after a 21-year career with Lloyd's Banking Group. This included a wide variety of senior management roles in banking, branch banking, corporate banking, and private banking as well. His last wealth management role for Lloyd's was Regional Director for London and the Southeast. Kevin is a Chartered Fellow, or what we call Chartered FCSI of the CISI, and a graduate of the University of Liverpool. Welcome, Kevin. And additionally, we'll be joined by Dr. Jonah Kangogo. Dr. Jonah is a banker with over 20 years experience and is currently the principal risk and control for corporate, commercial, and institutional banking at the Standard Chartered Bank Kenya Limited. His expertise in banking spans across operational risk, regulatory compliance, conduct, and business ethics. Dr. Jonah is a governance practitioner and is presently the presiding chairman of the Governing Council of Jaramogi Oginga Odinga University of Science and Technology, a chartered public university in Kenya. Dr. Jonah holds certification in corporate governance, financial markets, pensions management, business leadership, among others. His doctor in philosophy, or PhD, is in supply chain management, and he has taught in graduate business schools and published in international peer-reviewed journals. Yes, a wide variety of academic journals. Welcome, Dr. Jonah. And as you can see, we have a very great panel, and I'm sure we'll have a very useful discussion on integrity and ethical practice within financial services. So just a bit of housekeeping now before we begin. Now, all microphones of the audience have been muted, and you'll only be able to hear that of the panelists and myself, the moderator. And at the bottom of your screen, if you look at the bottom, you should see a set of buttons. The most important one there is actually the Q&A. So use that to type your questions and comments and submit. We'll see it on our end. And as much as possible, let us make this forum as interactive as we can and address what it is that you want to know most. So we encourage you to keep those questions coming. We may not have enough time to go through all of them, but certainly we'll do what we can. And additionally, I'll also ask the panelists to put their microphones on mute when they're not speaking. So before we kick off formally, let us first get a few words, a few quick words from a number of people, starting with Kevin Moore. Kevin Moore, maybe you can give us a brief about the work, the CISI within the field of integrity, not only in East Africa, but globally as well. Kevin.
Thank you, Kimasia. Yeah, I'll be brief because I'm very pleased to be part of such an esteemed panel. So I'm interested in what others have to say. I mean, I joined the CISI, as you say in my sort of bio. I joined, having worked for a bank for a long time. And I joined just as queues were forming outside banks in the UK when there was a run on banks at the beginning of the financial crisis, which in my 21 years with Lloyds, I never, ever thought that people would doubt, that their money was safe in bank institutions. I expect, you were used to seeing these things happen in far off places, but not in the UK. And, trust in financial services took a severe dent during the financial crisis, and it still hasn't recovered, certainly in globally. There'll be parts that have, but many places haven't. So, what we're doing today is an important part, I think, of rebuilding that trust in financial services. CISI includes integrity in its exams. The presentation we're going to do today is part of what we do. All our members have to take an online test when they join. So we really do try and keep integrity on the agenda. Thank you.
Okay, thank you. Thank you, Kevin. Next, let's hear from Patrick Mususa, the CEO of the TIOB, who will give us his blessing before the webinar. Patrick.
Thank you, Kimasia. Grateful that I remembered to unmute myself as I started to speak. So TIOB has been in the industry since the financial sector reforms in Tanzania. We have been working hard to grow with the banking industry, the banking sector. And in the last 5 to 10 years, we've seen diversification into different financial services within banks, spearheaded by mobile telecom companies and so forth. However, this quick proliferation of financial services has come with significant risks to liquidity, from liquidity issues to capital adequacy in different financial institutions. All these are anchored first in having the right integrity and ethical practices within the financial institutions. Thereafter, you can start building the models that you need for a successful financial business. And there have been challenges here and there since the inception or since the beginning of the financial services industry in Tanzania. We've had our own fair share of scandals of banks going under, mainly because there was lack of transparency and so forth. In some cases, these things have come to light, but in all cases, the regulators always stepped in to make sure that they mitigate the risk. However, there's always been a bearing on the issue of financial inclusion in Tanzania. And that's where we need to come in as the Tanzania Institute of Bankers. We've been working hard to develop the right level of exposure to different markets, different regions, and thus the partnerships that we have within the region with Kenya Institute of Bankers and the Uganda Institute of Banking and Financial Services, to learn from each other, to see what the experiences have been, and thus the partnership with CISI to know more about what's happening elsewhere in other financial services markets, so that we can learn what it is like when you have the right ethical practices in place, when you have people of integrity in the financial services business, what you could realize in terms of the impact to the different communities of stakeholders. And hence, that's why we're part of this conversation. And we hope to keep learning more so that our members can benefit from this knowledge.
Okay, thank you, Patrick. Next, let's hear from Julius Alego, CEO of the KIB. A few words from you, Julius.
Thank you, Kimashia. Always a pleasure to have you. And what do I say first is to say, I'm really delighted about this partnership with CISI. Thanks for bringing us together. To my colleagues in Uganda and Tanzania, it's a great pleasure to interact with you once again. And I think, to me, maybe just to mention that this is indeed a topical issue. It's an issue that for us as KIB, we are right at the core of revamping and re-engineering the Institute, and ethical standards is right at the top of it. But broadly, just thinking about this, do you know the number of banks in Kenya with the term integrity in its core values? And a quick survey will tell you that 2/3 of banks have that, okay? And I believe having this conversation will help us think of best practice to really drive integrity in the Kenyan banking system. And I think for me, it's gonna be an important discussion so that it's not just for compliance purposes, but indeed it is the strong moral compass, rightly as you said, Kimash, and I think it's gonna be absolutely important. One way we are absolutely also thinking in the way forward, near future, is for us to build a membership around the ethical best practice. And this conversation is really gonna help us on that line. And it's not just so much about onboarding members, but also start asking that difficult question about sanctioning deviant members as well. So I think getting that balance would be absolutely right for us. So we, as KIB, delighted with this, and thanks a lot. It's gonna go a long way in building integrity in the financial sector in Kenya. Thank you very much, Mashe.
Okay, thank you, Julius, for those words. And now, I believe we can now go into the discussions proper. So we'll start with the first theme. Basically, we want to know the key challenges and hindrances. And Goretti, I'll ask you to take the lead on this. Basically, what is it that you can see are the key challenges and hindrances that are faced as pertains to integrity and ethical practice within financial services? What are your experiences? Goretti.
Thank you very much, Kimasha, and good afternoon, everybody. I'm also very delighted from UIBFS to be with you to discuss a very important points, topics such as this. To probably share what I believe are challenges that we face and hindrances at the same time. I think the first one would say that we do not generally have an appreciation of the responsibility we hold as people working in the industry for the people that we serve. We often forget that our customers and clients come to us to support them to achieve their life's goals. And when we are dealing with them, we forget the area of empathy. If we think of the fact that honesty, transparency, being open, being fair are some of those things that characterize integrity, and where ethics is being right or wrong. So if we were to put ourselves in the position of the clients that come to us, have come to you so that I can achieve a goal, I can support my family, I can do all these things. And if you were me, what would you do to me? So I think initially is to appreciate that we do not come into the industry to earn a living per se, only to earn a living. We come into the industry to support. So the issue of appreciation is huge. The issue of knowledge is also huge. I think a number of people who come in and there is inadequate knowledge. The issue of full disclosure, we don't disclose everything that we have to disclose when we are speaking to our clients. I think that's very big. The issue of technology, as technology has evolved, so have opportunities for those that don't wish us well, for those that wish best for themselves. And so that has also been quite a big issue. And when I talk about technology, I would reference on a number of things we've experienced in the industry. For instance, very recently, a fraud that was busted where agents in the agent banking system were diverting funds that were meant for clients. That was a big one. The issue of non-disclosure, you find situations where a client signs on for a loan, they do not know that if they default, their interest rate is going to jump up multiple times. They don't know. And if they knew, they'll probably behave quite differently. The issue of collusion, you find staff colluding with clients. And so the issue of ethics and integrity is on both sides. And really, we are nurturing that. You collude, you give collateral that's non-existent or collateral that's very different from what is actually assumed to be when the loan is being actually approved. So there are quite a number of things. Gaps in regulation, we found those as well. Recently, we had a syndicate lending challenge where you had banks, the same bank in different territories, lending to a client who now takes advantage of the gap, not to want to decide not to want to pay. So there are quite a number of things. But I think what is worrying is the fact that they have become the norm and in the industry. And I heard Kevin say that at one point thought those were things that happened elsewhere, not in the UK. Unfortunately, now they're becoming the norm. So the gaps are several, and it is a real huge challenge. But I think it rests back on one area, one pillar. Do we appreciate the role and responsibility we have for our society and for our people? Thank you.
Okay, thank you, Goretti. Professor Assad, maybe you can add, you're on mute, Professor.
You can hear me now. I think banks are the only institutions that can run businesses on the basis of capital provided by others. And that is huge. I mean, you operate based on trust of other people. And when fraud and incidences like that occur, we erode a big chunk of the trust. So very, very critical. But in my view, the challenges are the issues you don't have control over. But I see issues we can actually have control over. So I don't agree they're challenges, but they're issues we should provide solutions for. So I'll mention a few. In Tanzania, late 80s, we had only about 4 banks. And now, after another 25, 30 years, of 42, 45 banks. So huge growth in terms of institutions. But the reservoir of personnel is exactly the same. So each of these institutions must pick from the same resource. And each of the new banks needs a footprint to become bigger and bigger in terms of footprint, but also in terms of market share. So what I see as a problem is the aggressive attitudes of banks when they come in. When they're aggressive, they just want bigger market share. They then don't care that much about the quality of personnel. So they'll attract all people who may not be very good into their banks. And then after a few years, you notice they engage in fraud. And that is a problem we should be able to resolve, but we don't resolve. We don't resolve because naturally financial institutions, including banks, are notorious for out-of-court settlements. So when you settle out of court, nobody knows what happened. So the other bank comes in, they will employ exactly the same person. And that for me is the second challenge. How can we generate a system where incidences are collected and incoming banks can know about what happened and who was involved in doing what? And then they can pick on that and then make sure they employ the right people. So that's the second one. The third one is, I think the lady mentioned that, weak sanctioning. And goes back with the second point. When you have out-of-court settlements, then you don't have sanctioned people who have done wrong. And we need to sanction publicly people who have done wrong. We had big problems in Tanzania with group schemes, where banks were giving loans to group schemes that were non-existent. So they're going to repayment in the first month, second month, and third month, they become non-performing. And everybody knows who involved or onboarded the group schemes, but they're letting go, they're let go, and nothing happens to them. So it's very important to have a proper sanctioning regime where we take actions and penalties against personnel who did wrong in financial institutions. So repercussions have got to be there. And finally, I think the other problem which I think we have is a database of everybody. Who is where? And if they did well, we should be able to award them that they done well in a year. And if they did wrong, we should say they did wrong and therefore they lose their jobs. So those are the few things that I think are quite important for me to mention this afternoon. Thank you very much.
Okay, thank you. Thank you very much, Professor Assad. Dr. Jonah, a few words.
Yeah, thank you. Thank you, Kamasha, and good afternoon, everyone. I'm going to just make three additions with regard to the challenges of implementing integrity within the financial services sector. First of all, we know that we are operating in an environment that is volatile, uncertain, complex, and also ambiguous. So nothing is linear. But within this environment, we still have to respond to the high calling of living with integrity and operating with integrity. Actually, when you look at the critical role of the financial services sector, one of the gateways of sustaining our integrity, of sustaining our reputation, is by ensuring that the sector itself operates within the perimeters of integrity. Integrity should be the internal referee that calls us to consistency. And one of the challenges, as I see, is weak value systems. What do we stand for? And this speaks directly to leadership. Are the leaders providing the direction? Are they role modeling the requirements of integrity? So I see that as one of the challenges, because it appears sometimes in the industry that integrity requirements are being emphasized when someone is within the working environment. But integrity goes beyond that. What do you do on the roads? Are you maintaining integrity? What do you do in the family? What do you do in the club? So it extends far beyond. If you are a banker, if you are working in the financial services sector, then there are no boundaries. You need to live with integrity irrespective of where you are 24/7. Then secondly, is that we know that we exist within a socio-political structure. Our organizations exist within the society, and also within our societies, there are certain cultures, and these cultures are not necessarily given to values of integrity. But then we have to overcome that. If within the financial services sector, we have individuals who have not been taught integrity in the school, by the schooling system, by society, by the way they were nurtured, then we have to find a way within the sector itself to provide the education and the training, and that's something which I find missing. How many of our institutions have got periodic trainings on integrity? How many have got electronic e-learnings which are mandatory, specifically geared towards integrity? Thank you. I will rest at that for now, Kimasha. Thank you.
Okay, thank you, Dr. Jonah. Kevin, few words on this, still on the theme of challenges and hindrances.
Now, I'll keep this very brief because I think we've heard some really, really good. I suspect that many of them will be reflected again as we work our way through the session. But I'll use 3 words, well, 4 if you include and: human nature and greed. Because I just think where you put people, if you have 100 people, some of them are going to have values that aren't strong on the ethical side. I'm trying to think of a nice way of saying it. And greed is a basic sort of human emotion, a way of dealing with things, a way of looking at life. And I think where you've got competitive environment, and you've got some people who'll just take competition too far, and that can be reflected at individual levels, in companies, the aggressive entry into the market of new players, incentive schemes, all the things that organizations might set up. My own bank years ago, when it was moving more into a sales culture from being a sort of traditional, fairly benign banking structure, it was moving more in sales. It gave sales more and more emphasis, and it became more and more keen just to see the results. And partly, and I think it was Goretti that mentioned ignorance. It wasn't necessarily people being evil or deliberately greedy even, but they didn't question maybe how some results were achieved. So people were top of league tables, they just got congratulated. And it took my bank a few years to realize that some people who got to the top of the league tables were doing it in completely the wrong way in terms of the customer, and exposing the bank to risk and not treating the customer fairly, all sorts of issues. And so then you needed a much more balanced approach where people were rewarded for both their sales results and their behaviors and their compliance and the way they actually followed processes. So you needed a much more balanced approach to things. But it took a few painful years, I think, of experience to learn that lesson. And traveling around the world, you can see that different stages of development in financial services in terms of learning those lessons. So greed and human nature, I think, is a big challenge, and it always will be.
Okay, thank you, Kevin. Greed and human nature. Okay, now we'll go into our presentation, an interactive presentation, an integrity at work presentation, and I'll ask Kevin to kick us off on this.
Okay, thanks, Kimassia.
Okay.
It's a good opportunity really for us to reflect on some of the words of the panelists so far, because I think almost everybody, including, I think if we move to the first slide, I mean, this could actually now be, I could actually put a picture of Professor Assad in the box instead of JP Morgan, because his first words were making the point that financial services is a trust, banking is a trust business. You generally don't see the product. If I was trying to sell a car, then at least the customer, can get in the car, test drive the car, kick the tires, to use the expression, literally. But financial services, you're entering into a pact. If you give your money to a bank, as Professor Assad said, you're effectively trusting that they're going to look after it for you and that you'll get it back on demand or on whatever terms you've agreed. If you invest, in a product sold to you by anybody in financial services, you're often not going to see the result of that for many years. I mean, look at a pension. You might not, it might be 20, 30, 40 years before you really derive the benefit or otherwise from what you've got into. So I think JP Morgan is on the button when he says it isn't about profit or wealth in theory, although this was an arch capitalist, but it is a trust business. Next slide, Frank. And this picks up again, I think, on what we were hearing from other panelists. In my career with Lloyds, and I'm going to relate it to that because that's the personal side for me, all my training in my 21 years at Lloyds focused on the top 2 boxes, on knowledge and skills. And Lloyds was an excellent organization for that. I'm very grateful. I still benefit from the training that I got every single year in those 21 years. But the behavior side hardly was discussed at all. Now, granted, I left, as I say, just before the financial crisis, so things are very different now. But up till the point that I left, behavior was just taken for granted. I do remember one meeting where it was the discussion for about literally 2 minutes was about the importance of behaving properly. But it was just like we quickly then moved on to whatever your sales performance or other issues. So behavior is critical. And then if you want to be a true professional, then it's got to be knowledge. You've got to know what you're doing. That deals or helps with the ignorance issue. You've got to have the skills to do it properly, the interpersonal skills, the communication skills and other sides. But above all, in a way, you've got to behave properly. Next slide. Yeah, I won't spend too long on the code of conduct because we've got other institutes here and they've all got codes of conduct. Suffice to say, with our code of conduct, we tried to give it teeth. And again, that's a topic that's already come up. And our members are held to account. And I only this morning had a meeting where an internal group, we look at disciplinary cases brought to our attention, people doing something wrong, not necessarily, not always involving the regulators or anything like that, but just, falling foul of their own disciplinary processes internally. And they're all investigated, and some of them are then referred on to our disciplinary panel. And nowadays, it's a very big and important area for us. Next one. Yeah, we're going to come back to this. This isn't really our code of conduct. These are just some words we're going to use. And again, I think Goretti was talking, I think she used at least 3 of these where she mentioned about, important values, important approaches to life, basically, if you're an individual in any job, not just financial services. But when we look at the scenarios later, we're going to, I'm going to go through just some background, but we're going to look at 2 different scenarios as part of this session. And you're going to make a judgment as to which would you do, A, B, C, or D in a particular set of circumstances. And your test, as it were, your way of measuring your decision can be, is it honest? Is it open? Is it transparent? Is it fair? Would you be prepared to tell your mother or your father about it and feel proud, or would you rather keep it quiet? So move on to the next slide, Frank. We'll keep going. Won't spend too long on this. Look at this slide, quickly register that the ordinary person in the street is sort of middle trusted in terms of who do you trust? Nurses up the top, politicians, advertising pretty much down the bottom. Next slide, Frank. Yeah, bankers. Bankers, back one, please, just back one to the bankers were not, when I joined the banking industry back in the late 80s, I'm pretty sure that if you'd have run a survey then, and there are some numbers, particularly from a UK perspective, banking was a trusted industry. I think my parents regarded me as taking a rather boring decision becoming a banker, but a respectable decision. And well, that has changed. The bankers are not held in the UK and in some other parts of the world in the same esteem, maybe, as they were a while ago. And it's going to take time. So look at the next slide, Frank. Now, this is a global survey looking at different sectors, and we're not going to spend too long on it, but the financial services is the bottom sector. And it's interesting actually how the pandemic has taken everyone downwards actually, but even so, going right back to the beginning, Professor Assad's first words and JP Morgan's, it's a trust business, and yet actually, generally speaking, trust is lower than it is in areas like energy, food and beverage, technology. So worth thinking about. Next slide. So quick few words from Christine Lagarde there, and again, this sort of came up earlier, ethics upgrade. She's, the president of the European Central Bank, and talking about doing the right thing when nobody is watching. So again, this isn't about necessarily a philosophical look at, what is right or wrong, what is good or evil. This is about the practicalities and stripping it down to, people doing the right thing even when nobody is watching. It's not a bad way of thinking about a test of ethical values. Next slide, friend. Won't spend too long on these. Just take away the point. If anyone wants some of the slides, or this will all be on CISI TV later and shared. But it is interesting that business is actually coming out in this trust survey run by Edelman, which it's well worth looking up on the internet if you want to look at their website and see what else they do, because they try and score and measure trust all over the world. And one of the facts they're coming up with is that business is actually the only area that's seen as both competent and ethical. You've got others that are seen as ethical but not so competent, and some that are seen as both unethical and less competent. So business, which includes financial services, has that opportunity to capitalize on being in that broad area. Next one. And again, you just have a quick look. Not every country is represented, but you might spot Kenya there in the middle. It's an interesting fact that above all different people that people trust, their employer is often actually someone that is more trusted than not. So, you know, again, something that financial services can take in mind, that just being an employer actually gives you some position of trust. And particularly, as I say, Kenya's actually got better. So move to the next one. Yeah, I mean, as opposed to the UK, where actually that's been more shaky, you see the position in Kenya has improved. Next one, we'll just move on. That's just a point that sometimes people view business as untrustworthy, whereas actually that survey says, no, not necessarily. People in business maybe sometimes. I won't spend too long on this, but you know, sometimes people, particularly when we're looking at this, and we're all looking at it from a financial services viewpoint today, it's easy to beat yourself up and think, well, how terrible is financial services? But examples of breaches of trust are everywhere, you know, in all industries, in all parts of the world, and in, you know, you've got people like, and in sport. I mean, I don't know how many of you will remember the Luis Suarez handball against Ghana in the World Cup, not the last one, or even the last one, but more recently. I'm sure it's remembered in Ghana. You know, and it was interesting to me at the time and afterwards, in the sense of, you know, we say cheats never prosper, but actually they do sometimes. You know, Ghana lost that match from being in a winning position, and they would have won with that. You know, Lance Armstrong won a lot, you know, achieved worldwide fame and renown until it was discovered that he was a drugs cheat. You know, and you've got other examples more recently, the Pandora Papers, you know, showing that the line around integrity isn't just about obeying the law. I mean, the Pandora Papers have released, you know, details of people's financial affairs, and it's not necessarily, in fact, it's not that they've necessarily broken any law, these individuals, but they're operating in the grey area maybe, and they're certainly not necessarily, I think, doing something they'd be proud of. You know, these facts wouldn't have come out unless someone had leaked the Pandora Papers. So integrity, you know, is an issue in life generally, as was said earlier, and, you know, in all areas, not just financial services, obviously. Next slide, Fran. So just to remind you again, we had a quick look at this before: honest, open, transparent, and fair. I'll keep saying it because it's a nice, simple way of just assessing a situation and almost traffic lighting it. You know, can I genuinely give H, honest, a green light? Or is it a bit ambiguous, maybe amber, or is it an absolute red? So use the traffic light system in your head to say honest, open, transparent, and fair. And if it helps to think of looking into your mother's eyes and believing and wondering whether she'd be proud of you, or your father, or anyone that you respect, then that's another good test, I think, of, is your decision generally doing the right thing, or is it something that makes sense but isn't necessarily a good thing to do. Next one, Frank. So this is the first dilemma. If you move to the first slide, the next slide. So I'll tell the story, but you can read the words at the same time. So I want you to imagine that you're the chairman of a firm of fund managers, and you employ Brian, and Brian is one of your best fund managers, and he's worked with you for a long, long time. And you want to reward Brian for both his successful performance and indeed his longevity, the fact that he's worked with you, for his loyalty. So you want to make Brian a director. So the papers have been put together to get your board to ratify the proposal that Brian should be invited to join the board. And tucked away in the papers for the board's consideration is Brian's original CV from when he joined you, which clearly states that he graduated back in 1985. Now, one of your non-executive directors gives you a call and says, you know, let's pretend it's me, it's Kevin. Kevin, you know, I've got a concern here because I was at university with Brian and I don't think he graduated. I don't remember the circumstances, but I'm pretty certain that he actually left without taking his degree for some reason. Now, your business is launching a new fund. Brian is one of the key fund managers, and all over the marketing literature is Brian, we'll call him Brian Moore, BSc. So you call Brian in and say, Brian, can you explain this? You know, this concern raised by the non-executive director. Did you really graduate in 1985? And Brian confesses that he did not graduate. And really sadly, his mother died just before he was due to take his finals. He had to go home, hold his family together, and he never graduated. So he is not Brian Moore, BSc. So next slide, please, Fran. So you've got 4 options. You're the big boss. What are you going to do? So option A is you're not going to worry about it too much. It's a long time ago, isn't it? And how relevant is his degree anyway? So you obviously you take the reference to the BSc of the advertising, but you still invite Brian to join the board. So it's still congratulations, Brian. Option A. Option B, you ask Brian to pay a fine. You're not happy really with what he's done. You explain to him that in the circumstances, it's not appropriate to promote him to the board, perhaps in the future, but not now. And again, you remove the reference to his degree in the advertising. So option A is straightforward. Congratulations, carry on, promote. Option B is Brian, is forced to admit he's done something wrong, but he keeps his job, and perhaps in the future he could become a director. So not too bad for Brian. Now it starts to go wrong for Brian. Option C. So you take him out to the car park and you've known him a long time. You put your arm around his shoulder and you say, you're very sorry, but in the circumstances, you're going to have to ask for his resignation. And you amend the launch material to remove him. And option D, even more drastic for Brian. You tell him that unfortunately, you're going to have to put this in the hands of HR, but that the process will begin to dismiss him. So you're looking to sack Brian for what he's done. So, it's quite a spread here in terms of your decision making, congratulating him, keeping him in the business, asking him to resign, or sacking him. Remember HOTF, honest, open, transparent, and fair, when you're thinking through what you're going to do. You've now got the options on the screen. So the hosts and panelists can't vote, but everybody out there in the virtual world can. I'll keep talking for a bit because normally if we were in a physical room, I would ask people to talk to the person next to them, but I suspect most of you haven't got a person next to you. So you'll just have to work this one through for yourself. My colleague Fran will be counting how many votes we've got. They're anonymous, by the way, just in case anyone's worried. We're not tracking back the results to any individual. We can't do that. We just want to make sure we've got enough votes so we can see what the results of the jury are on this occasion. So think it through, honest, open, transparent, and fair. And of course, think about the real world as well. What would you really do? Okay, Fran, let's see the results now anyway. That's interesting. So first thing to note here is that we've got a vote in every category. So if anybody was thinking that there was one right answer and everyone would vote for it, well, there's something to be disabused of straight away. The majority of people are saying bye-bye, Brian. Now, again, in a normal room of people, I'd probably ask for more comments, and you're welcome to use the chat to make any observations on this, but I'll do it myself, I think, and say the sort of things that people usually say. So we've got most people going for the resignation option, and most people going for the, and some people going for sacking him. But still, a reasonable proportion of people keeping him in the business, and one way or another. In fact, nearly a quarter of people voting are keeping Brian in the company. So I will just run through now the honest, open, transparent, and fair. Has his behavior been honest? I think if I was looking at you as a room of people, I'd be sort of looking for a lot of heads to go side to side. Has he been open and transparent? No, because he's only come forward with this when he's been caught. I've done this so often that I sort of believe Brian's a real person. And in fact, I've heard plenty of people tell me about real Brians and real situations like this. But let's remember, Brian didn't confess to this. He was asked about this. He could have confessed about this early on in his career, maybe, in which case the issue could have been dealt with, but he didn't. So, he has been lying. And the BSc that was on the marketing literature, and presumably on other marketing literature over the years, was also lying. So, he's caused your business to say something that wasn't true. So I think it's quite difficult to defend keeping you in. Fran, move on to let's have a look at the next slide. Yeah. I mean, I think there's a big difference between inflating your CV and actually lying. There's lines, aren't there? Talking about maybe I've got project management experience, where you've got a bit of experience and maybe not a lot of experience, but you've got some, is one thing. But lying and saying you've got project management experience when you have no experience is a different matter. And in this instance, Brian has gone one stage further than that. And if I think it was mentioned earlier about the percentage of businesses that have integrity, in their mission statement or their code of conduct or whatever, their purpose statement. It's quite difficult to defend a position where, when you find out that a senior person, someone you wanted to make a director, effectively lied their way into the job, that you keep them on. And in some regulators, I'll defer to the expertise both in the audience and on the panel in terms of what might happen in different parts of East Africa. But in many roles, certainly in the UK, that person would be registered with the regulator, and you would have to tell the regulator that you've discovered this. And I think it would be quite difficult to say why you were keeping them. So move on to the next. Let's have a look at the next slide. Next one as well. Yeah, we have an integrity committee. Sorry, go back, Fran. Easily trigger happy. It's easy to to say there is no one correct answer. You could argue D is correct as well. We have an integrity committee who talk about these things, and a bit like the audience today, they don't necessarily agree on everything. That's the whole point with this. If integrity was easy, we'd all be full of integrity. But their collective view was that allowing him to resign provided a balance between treating a long-serving employee with some sort of compassion and sympathy, particularly regarding the fact that this happened because of the death of his mother. On the other hand, I have heard people say, well, it is sad, but on the other hand, is the business just covering it up? And we heard before the reference to the number of out-of-court settlements agreed to by banks. So, but C, D on balance, difficult for A and B. So let's have a look at the next one. Okay, we'll do this. There's lots of examples, and I'm sure you'll all know them, so I won't spend long on these. And as I say, you can look at the detail of this after the event. Next slide, Frank. And the next one. Actually, we'll move straight to the next scenario. So quick reminder about HOTF, and now we'll look at the second one. So yeah, so this time, so you've been a chairman in this particular set. Sometimes we do more. You might have bumped around in terms of levels, but you're the managing director of a major company, and it's 6 weeks before the year end. So, quite a critical point for most businesses as you start to see how the results are going to end. So 2 days ago, one of your sales teams made it onto the shortlist for a major tender, one that actually is a bit of a game changer, because if this bit of business comes off, then actually those year-end figures are going to look very healthy. If it doesn't come off, then that's going to have a big impact, a negative impact. Now, your team has been asked to go and make a presentation along with other shortlisted competitors. And while they're outside waiting, if you look at the picture, it gives you a clue. Whilst they're outside in the waiting area, waiting to go in to make their presentation, they find a pack marked up confidential, but they find an envelope with some material in, which even a quick glance shows that it's one of their competitors' pitch. They can see that there's the same sort of things that they've got: hard copies of PowerPoint slides, some numbers, some glossy printouts of the products and services they'll be offering. So your team looks like they found one of the competitors' pitch books. Next slide, Frank. So when they're looking at all this, the boardroom doors open and they're asked in to go and make their presentation. They do the presentation, but afterwards they keep the pack, they take it back to the office and have a good look at it. Later in the day, the good news is they're asked to go back in 3 days with their final offer. But they're told they're now down to 2. They're part of there is one other competitor left in the game. And sure enough, a few phone calls, a few chasing up friends, they realized that they've actually got their competitors' documents. So it's the competitor they're up against whose documents they found while they were making their pitch. So of course they in their world make the obvious decision. They use the information they've got to change their own pitch so that it's more competitive. It includes some elements that maybe it wouldn't have done originally to make sure that it should be a shoo-in. And because they're salespeople, they're very pleased with themselves. And when they meet up with colleagues at a social event, they start telling everybody, we're going to get this business, we're going to be the heroes, we're going to deliver brilliant year-end performance. And they tell the story about how they found the pitch book, how they've used the information, and how it should be a shoo-in. Now, you're the boss, you're the chairman or managing director in this one, sorry. And on the day they're due to go out, on that 3rd day, in the morning, one of your colleagues comes up to you and says, and again, I'll pretend I'm the person, Kevin, have you heard this story going the rounds? There's a big rumor that the sales team found the pitch book belonging to the competitor today. They've used the information and they're about to go out and make the pitch. So next slide. What are you going to do? So you've got 4 options. So option A, congratulate them. You go and find them in the room where they're gathering just before they go out. You high five them all and tell them, great job, go out there, get me that business. So option A, congratulate. B, when your colleague is telling you the story, you put your phone up. I'm not sure if you can see it because I've got one of those fake backgrounds that makes everything go invisible, but I'm pretending to hold a phone to my ear. So while the person's talking to you, you just walk away, put your hand up, sorry, got to make a call, and you go back to your office. So option A, congratulate. Option B, phone's ringing, you avoid the conversation, you go back to your room and you stay there. Option C, you get on the phone to the client this time, the potential client, and you tell them that you accidentally, you in error, obtained a competitor's pitch book, but that to reassure them that you will not be using it, and you don't. You make the sales team revert to the original pitch. Or D, more extreme, you get hold of the client, you apologize, you say, I'm sorry, but we've compromised our bid and we're going to have to withdraw. And you consider whether disciplinary action is warranted against the team members. So option A, B, C, D, 4 big choices, big spread. Option A, very much sort of Wolf of Wall Street, congratulations. Option D, you're pulling out. So Fran, can we have the voting? I'll tell you what, let's not worry, don't worry. I mean, I want to get back to the panel discussion anyway. So what we'll do is I'll pretend that we've had results because I've seen this many times, and I'm gonna guess what the results of the group would be. So I'm sorry you can't vote, but in some ways it might reflect. Oh, that's very honest and open. By someone telling everyone they would have gone for D. Apologise. So Taraku, excellent. Thank you very much. I think actually, I'm sure most people would have probably voted C or D, a bit like the last time. You know, again, you can argue that are you disadvantaging the client if you apologize and pull out? And you know, but either which way, you are being more honest and open and transparent and fair by at least giving the client the opportunity to decide what they want to do. Somebody else has gone for D. We used to do this with a show of hands, and of course the problem with a show of hands is that, and I remember when I first, is that once a few people put their hands up, then everyone will go with the same vote. The beauty of the online poll is that you don't know what everyone's voting. Someone's gone C, so we're seeing C and D. B is a sometimes you do get people answering that. I don't think anyone's going to, I'm sure pretty well no one's going to message the group and say B, because that to me is the worst answer in many ways, because it's plausible deniability. You don't mind what your team does, but you don't want to be close to it if it goes wrong. So, you know, to me, that's like the worst sort of boss. Doesn't mind the result, just doesn't want to be associated with the way that it's been achieved. And A is interesting because you can argue that within the team, the individual has been open and transparent, but it's very difficult to describe the behavior as honest or fair. You've achieved an unfair advantage by taking this. And before I move on and finish off the presentation, I'll tell you one brief anecdote that I think expresses how these things work in real life. I presented once to a group of wealth managers, and so we related it to a wealth management scenario, and more of them voted actually for A. And I was really surprised. I was expecting, as I've said, that I'm sure most of you would have voted C and D, but I got actually quite a strong vote for A from this group. And I said the same thing to them. I'm a bit surprised. And they said, well, it's our duty to protect our clients from stupid people, and stupid people leave things lying around. So it's duty of care. So I could see the argument. I don't agree with it particularly, but I could see their argument. And I can see actually it's making some of the panelists smile, because it's because you can sort of see where they're coming from, but on the other hand, it's sort of twisting something. Anyway, I said to them, okay, so your big issue with this is that it is around the fact that, they were stupid to leave it lying around, So let's say instead then that the documents, instead of being left on the table, the documents were in a briefcase. And the room, and I want you all to pretend you're in a room, because I'm not so keen on this all virtual environment, but But if this was a room, I'd be looking at the room and everyone would be waiting to see what I said next, because the room were looking at me. And then one of them put his hand up at the front of the room and said, "Was the briefcase locked?" And I looked at them. They work for a big Swiss private bank. And I said, "What? So that's a big difference to you if the briefcase is locked. So presumably you wouldn't get a pin out and and fiddle the lock or crack the lock or whatever." "Oh no, we wouldn't do that." So I said, "Okay, so let's say it's unlocked and open." And one of them said, "How open?" And we had a bit of a game for a few minutes where, and imagine now you've got a picture in your head, a briefcase, my hand in it. And I said, "Okay, so is it okay to put your hand into the briefcase and pull the documents out?" And generally they all agreed no. But I pulled the documents out and I said, "At what point would you feel it was okay to take these documents?" And again, it's a sort of something that might make you smile, but not at the beginning. It was no, 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 yes. When they were about halfway out of the briefcase, the consensus there was it's okay to take them. Well, to me, it's the same, whether you're putting your hand in the briefcase, whether the documents are half out of the briefcase, they're not your documents. And I think earlier on, one of the panelists talked about the difference between your personal, or the fact that there shouldn't be a difference between how you behave at home and how you behave at work. People would not apply that logic in their home environment, to taking someone from someone else's home. But somehow when people are at work, they maybe think that a different set of standards exist. So all of you thinking of C and D, B is the dodgy one to me. A, that's very Wolf of Wall Street. Let's have a look, finish off quickly and get back to the panel. So next slide, please, Frank. So yeah, honest, open, transparent, fair. So move on, next one. Yeah, so that's the integrity committee's view, but again, actually quite a few of them thought C as well, as I've just said. Next one. Yep, move on, we'll move this. I want to get back to the panel. It's just breaking it up. So let's just remember, and maybe some of this might well come up again when we're talking through issues in the panel discussion. Honest, open, transparent, fair. Not difficult to remember, much more difficult to always apply in real life, but nevertheless, quite a nice way to check out whether values are being followed or whether you're doing something for the wrong reasons. Next slide, Frank. I know a reminder there about the importance of behavior, but the mere fact you're at this event and the mere fact we're doing lots more of these events, I think everyone now acknowledges just how important behavior is. Next one. Yeah, that's our purpose. And I'll end again with the wise words of somebody else. Next one. Yeah. So we couldn't get Warren Buffett for the panel today, but it would be quite good if you could one day. And many of you may have well heard this, but I'll read it because I think it shows the practical side of integrity. It's not just a nice thing to have. If anyone thinks it's like something about sustainable and green and modern businesses, Warren Buffett, arch capitalist in so many ways, but in looking for people to hire, look for three qualities: integrity, intelligence, and energy. And if they don't have the first, the other two will kill you. So pretty stark message for everybody. And thank you very much. And back to the panel.
Okay, thank you. Thank you, Kevin, for that eye-opening interactive session. And for those who voted, thank you very much for making it a lively session. And apologies for not being able to vote on the second dilemma. But nonetheless, we can now quickly move on to the additional themes for discussion by the panel. And the second theme I want us to look at is basically on infrastructure, building an efficient and effective ethical and integrity framework at the workplace. And Dr. Jonah, I'll ask you to take the lead on this. And maybe you can elaborate. What do you say are the most effective practices that firms should adopt? Dr. Jonah.
Yeah, thank you. There are several practices, but I'm just going to focus on what I consider to be the key practices. And the first one is ensuring that there is a strong implementation framework around the code of conduct. I know that for all the financial services entities in East Africa and Africa, they have a code of conduct. So it is important to ensure that there is a strong implementation mechanism to ensure that it is actually a live document, so that when the employees are referring to the code of conduct, they can be able to tell about the expectations. example, if one is an FX trader, they should be able to understand what integrity means in FX trading, and that is transparent pricing, following the letter and the spirit of the laws and regulations. If you are a staff in the front line, what does integrity mean? It means rendering accurate and true information to the client. And if you are a leader, what is the expectation? You are required to embody the values of the organization and lead by example. That is, there should be seamless synchronization between the words of a leader and their actions. So generally, for all the professionals within the financial services sector, there has to be what is called balancing the integrity equation. That is balancing what we speak and the way we act, balancing our words and our actions. There should be perfect congruence between our commitments and our deeds, alignment between our values and our ideals, and also our conduct towards all the stakeholders. So within the code of conduct, there has to be a detailed implementation framework. So when if the expectation within the code of conduct, for example, is that there should be a proper market conduct, there should be no insider dealing, then there should be a detailed policy that explains what is insider dealing. When we talk about complying with the laws and regulations, there should also be corresponding guidelines indicating what are these laws and regulations that need to be complied with. So at the center of it all, there is a code of conduct, but then we also have policies and procedures that have got a symbiotic relationship with the code of conduct. And someone has posted within the chat and said that integrity has to be practiced, or it should be used, it should be considered when vetting the staff. That is Edward John Mwaliego. And that comes in also when it comes to the policy framework for operationalizing the code of conduct. There should be an HR policy, for example, that says that staff being onboarded have to be of the right caliber. So when we speak about integrity, being smart is not enough. So a shiny CV is not enough for one to work in the financial services sector. You can be an intellectual barbarian. Integrity is of utmost importance. So there should also be continuous training and education to ensure that the staff develop a shared understanding, clearly understanding the requirements of integrity for their various roles. And then secondly, and also very important, is leadership, which is the litmus test for integrity. If the leaders do not exhibit integrity in their DNA, then even the implementation of the code of conduct is going to suffer a major setback. Leaders have to take responsibility of their own behavior, and they should also amplify in their character the key requirements of the code of conduct. Very importantly also is that there should be consideration for the external environment. And in this, I'm talking about regulators. What are the requirements of the regulators? What are the requirements in the law? All these have to be inculcated into the code of conduct, because at the end of the day, we are a corporate citizen, and our actions and our words are visible to the external world. So I would consider those as very, very important, but also leveraging data to gain insights on the demonstrated behaviors. So as we implement the code of conduct, what are the infractions? What are the areas where we have been deficient? So there has to be a mechanism for tracking all those key components, both the deviations as well as the good behaviors which need to be reinforced. And at the end of the day, within the financial services, we need to say that integrity is our destiny. It is the light that guides the way. Thank you.
Okay, thank you, Dr. Jonah. Professor Assad, if you can add on to that.
Thank you very much, Nairobi. I think if you talk about framework, necessarily you must mention three issues or components. One is structure. And for me, structure is things like the ethical committee and committee arrangements, but also escalation mechanism and appeals, if that is thought necessary. So that is important to do. Make sure that we have a structure that is complete and fulfills the purpose. Number two, you fill the structure with the right personnel. So personnel is the second component, very, very important. Like my friend mentioned, of course, leaders are going to fit in there in human resource, in personnel, but also in personnel, we're going to have the HR policies that encourage onboarding of the right people, the right ethical people, but also encouraging offloading of the unethical people as well. So that's the second aspect of personnel. The third aspect for me are the systems. And systems here, we are talking to issue like the code of ethics, policies and procedures. That is a very important component as well. So for me, these three components are important in any framework. And for an ethical framework, if I can repeat, structure, committees, etc., escalation arrangement and appeal mechanism, very important. Number two, filling the structure with the right people, the right ethical people. And number three, systems and documentation to make sure that everything is in there. And those are the three most important aspects that I think we must consider in building an effective ethical framework. Thank you very much.
Thank you, Professor Assad. Goretti, anything to add? You're on mute, Goretti.
Oh, thank you very much. Probably to add to what has already been said, I think firms should institute feedback mechanisms and checks. It would be very good for firms to understand the level of appreciation, the level of understanding of their clients when they do business with them. I think that would be able to educate you to see if your staff are doing the right thing. Similarly, there should be feedback from staff, just checking product knowledge, the whole end. Do they actually know what they're supposed to be doing? So those checks, both on the client side and on the staff side, would be very important. The other that I would say is then training. Constant training and skilling would be very, very important. And of course, making them aware of the, for instance, the presentation Kevin did is very good. So that should happen, and it should be continuous and constant, because you often have people coming in at the time of orientation, at the time, when there's pressure, the targets are on, you're ending the quarter. There are sometimes some of those very opportune moments when you should be able to train. The other bit is commitment. I think as an industry, it's been said, and it was already said, that very often the industry does not come out in the open to show or to state what exactly is happening. So you find that a lot of frauds, a lot of those things are not communicated. We talked about out-of-court settlements. So I think it's important as the industry to be committed and say that they will apply the honesty, openness, transparency, and fairness to the public. Thank you.
Yeah, thank you, Goretti. Kevin, some quick words on this.
Yeah, I'll be very quick because I think it's pretty well being said. I think one of the things is to have a really long-term commitment to this. It was quite interesting. It is for the CISI. That presentation I've just delivered, for example, we've run quite big programs for some of the banks where maybe they've had 50 of those sessions globally, and all of this. But one bank, and I won't name the bank, but I spoke to someone in one bank few years back, and I said something about our integrity work. Individuals said to me, "Oh, we're sick to death of integrity." You know, and I understood it. I've worked for an organization where, you know, for a while there's a lot of emphasis on it. You know, maybe mass mats are produced, and the message is the marketing message is thrust out to you. You have to attend sessions on something, and again, human nature sometimes is to think, look, we've done that, and I'm an honest person. I don't need another session telling me I should be honest. But I think that again, that sort of complacency is really dangerous, because, you know, human nature doesn't really change. I saw in some of the chat that, you know, if people are intent on behaving badly, the chances are they will, unless you've got the structures and the processes and everything else in place, and you then get rid of them. You know, I don't think it's a bank's job to necessarily produce salvation for individuals. You know? So yeah, this is something for the long term if it's to be sustainable. Thank you.
Okay, thank you, Kevin. And just a question from the audience. And one anonymous attendee notes the problem. Kevin, I saw you answered this, so maybe you can take the lead on this. The problem is most HRs in the banking industry do not disclose the true character of ex-employees when they are brought into the vetting process. So, question: can the bank rely on the informal character vetting of an employee? Kevin.
It's actually, do you know what? I answered it, but I didn't actually get the subtlety of the point. Because I mean, we're the same, the CISI. Our references are fairly bland when someone leaves. You know, which is what I put at the end of my answer, that there's no foolproof system. Because I'd be slightly uncomfortable in a world where, you know, maybe you fell out with your employers and then they damn you with your reference and you can't get another job because they effectively say bad things about you and they're not deserved. So it's a difficult balancing act. But I mean, there are things like, you know, references to anybody who's referred to a regulator. And, you know, it's maybe wrong, but I think a lot of the time, frankly, we also rely on maybe getting in touch with someone else who works there and getting a bit of an informal assessment of an individual, which I realize isn't practical anyway for large scale recruitment. So maybe some more testing when people join, ask, you know, when the situations we've just looked at, you might be amazed at the number of times you do get a group of people voting for the unethical answers. So maybe you start to build that sort of stuff into your induction training, and maybe look at the people who you do look at the people who answer unethically or say something that demonstrates they don't quite understand the values of the business. Yeah, difficult one.
Okay, thank you, Kevin. I believe let's now move into the next theme, which is the theme of recommendations. And under this, and Professor Assad, I'll ask you to take the lead on this. Well, what actions or practices or regulations do you recommend if you're speaking to key players within the industry, regulators, professional bodies, etc.? What do you recommend, basically, that they propose for adoption by the industry to assist to better foster integrity and ethical practices within the industry? Professor Assad.
Thank you, Kimasi. I think if I can start, I'll start with the problem of the database of wrongdoing. So whatever has happened in any bank, it needs to be collected and preserved so that we know which personnel was involved, and that information should be available within our institutes. And then when something happens, that personnel is going to be hired by somebody else, that information should be available. Now, I can feel some people saying, no, you can't reveal that information. If it is factual, there's no problem with that. The problem is that information is judgmental. So we avoid judgmental information and just put the facts. This is what happened. He onboarded a group scheme, and that group scheme did not perform within 3 months, was a non-performing facility. And that's important information. Whoever wants that information, they can have that information, and that'll be useful so that somebody does not get involved in onboarding of suspicious clients in the financial system. That is number one. Number two is awarding good behavior. We award good banks, but we don't award good behavior on individual staff. So let's start something to award ethical conduct within financial institutions. I haven't heard of any bank that awards somebody because they've been very ethical. And we need to award so that people can get recognition for being ethical. That will be my recommendation. The opposite side of the coin is also relevant. Punish, sanction people who are unethical. And that punishment can be within banks, but also it can be public. It depends on the scale of the unethical conduct. If somebody did something very, very bad for the society, then they get known to everybody else. This is what they've done and they lost the job. So certainly awarding and recognition is one, but also sanctioning and punishment should be a recommendation as well. But also finally, this matter of ethical conduct needs to be regulated as well as the conduct of banking itself. So say if you have a non-performing reaching 15% in a bank, that's bad news. So we should all be able to track ethical conduct within a bank as part of the regulation. So these are the three aspects I thought would be important for us to consider in terms of recommendation. Thank you very much, Kimasia.
Thank you, Professor Assad. Goretti, your recommendations.
Thank you very much, Kimasia. Looking at Kevin's presentation, it was no surprise that nurses, doctors, engineers enjoy the biggest trust. And I think it's coming from the well-regulated environment. The nurses and doctors, the doctors in particular, as part of their training, take the Hippocratic oath, and it's an oath of ethics. I think countries or our communities, our societies, of course, think of the consequences for unethical conduct in medicine and in engineering as death. And so it's taken very seriously. So I think it's high time that the same level of seriousness is attributed to this, and therefore, for company, I know that there are countries already where the institutions like ours or institutes like ours are enacted. They have been passed by an act of parliament. And I think that that is one of the things that we could do so that the practice is taken that seriously. But once that is taken or done, then our code of conduct should be taken as seriously as those for the disciplines I've already talked about. Thank you.
Okay. Kevin, maybe you can add some flavor on that theme.
Yeah, I think picking up it's interesting, isn't it? I mean, you know, financial services isn't the same currently. It isn't the same as being a doctor or even an accountant or a chartered surveyor or others, where you know there's generally one or two accepted routes into it. There's to remain a doctor, you have to do CPD or continuing professional development to keep your knowledge up to date. And that's happening in financial services now, but not across the board. Maybe only in some areas like retail advisors, but not maybe the people making actually decisions around investments and other areas, or corporate finance, where you may be getting all these issues around non-performing loans. It's interesting. I mean, one other challenge for this, and in the CISI's experience, is that we do name members who transgress, who are disciplined for certain offences. They get named in the magazine, in our magazine. And what I would say is, it is often fiercely contested, and quite a tough challenge for the institute, for the CISI, to take people on who are often, can employ very good lawyers, often have the finances behind them, maybe of their employer, of their bank, and it's tough because in our setup, there's no protection for us. So whereas the regulators are protected by statute, if we made a mistake and we got it wrong with someone and they successfully proved that we got it wrong, we could be sued a significant amount of money. And that is a challenge, because once you start to be able to take away people's jobs from them, which is the case for some jobs requiring licenses in the UK, then you know we'll fight back, and it sort of raises the stakes all round. We've had to build up our team working in that area. We frequently have to employ a lawyer to act for us, and the costs of doing this has become, you know, the costs have gone up, and there's always that risk. And I've told our chief executive that one day we'll get it wrong. One day we will make a mistake, and one day somebody will expose that, and the institute will have to deal with the consequences. Nobody is infallible, so it's a challenge.
Okay, Dr. Jonah.
Yeah. Yes, in my view, I think the regulators can play a role by introducing some form of audit mechanism or measurement tool for integrity. I think that is very vital. I have seen this in other markets where there are some measures for integrity which is applied across several industry sectors. I think one thing which, if this is done, then we can be able to kind of get a view as to the levels of integrity within the particular, within the financial services. Thank you.
Okay, thank you, Dr. Jonah. Let me take a question from the audience, and I'll put it out there for any panelists to answer. Is it illicit or is it allowed to test employee behavior or integrity anonymously by the institution itself? I guess putting someone in a compromising position and see how they behave. Is this something that's allowed? I don't know. Anyone?
Do you know, I'll answer because I was hoping someone else would, because it's a tough question. I mean, I'm answering for myself. There's no institute view on this. I've never been asked the question. I think it's a tricky one to do that because, you know, if you're going to say that your organization is honest, open, transparent, and fair, and those are values that you want your employees to live by, then checking up on them or you know, laying honey traps in front of people to try and you know, it's entrapment. I mean, it's, again, I don't know about the law in different parts of East Africa, but you know, the police get into trouble here sometimes for enticing, you know, being seen as enticing somebody to do something wrong. So I think it's difficult. I'd be more comfortable with upfront, very obvious, let's discuss things, let's get things in the open. I mean, that presentation, one of the values of that presentation, if I was doing that in a bank, would be when they can see that not everybody in the room agrees. When they voted, they probably think their answer is the one everyone agrees with. They then realize that not everyone agrees with them. And actually a percentage of the room may well be thinking, may well want to do something that isn't right. So you're sort of flushing views up to you're flushing things out that otherwise, if you don't have open discussion, no one knows that. So I'm in favor of open, transparent ways of judging people's behavior, and indeed encouraging things like whistleblowing or speaking up, you know, so that there's mechanisms by which people can say if they believe or know that somebody is doing something wrong. So I think there's ways you can do it, you know, without effectively spying or tricking people. Personally, I'm not keen on that.
Okay.
Yes, Kimasha.
Yes.
I'm also supportive of integrity being measured by business as usual, but not creating artificial scenarios. I think it is best for BAU to test integrity, and that is adequate. Thank you.
Okay, thank you, Dr. Jonah. Tariku, I hope your question.
Maybe, Kimasya.
Yes.
So then there is the usual mystery surveys, and that's usual for customer service. And I think part of customer service is integrity. How do you handle that? Okay, whereas you may not necessarily entice somebody, but I think there is a thin line. And maybe we could hear from Kevin. How do you handle that? Because that's done normally.
I think, you know, customer surveys are you know, a good way of finding out if people are trusted. I mean, I'm thinking of examples of, so I've done some work with banks in the Middle East, you know, where I know that one of the things they did was ask people afterwards, you know, did you do surveys saying, you know, did you feel you bought a product? Did you feel that you were treated fairly? Did you understand everything? And I think that's fair enough, because the person doing the selling knows this is going to happen. You know, I know that's not quite mystery shopping, but they know that the individual is going to be asked for feedback. Because again, I sort of think some of these things have to be, you have to nudge people into behaving properly sometimes, you know, and assume that not everyone will do it without a nudge. So I think mystery shopping, when I worked in a bank, that was effective. Suddenly people started to think, you know, I think, well, I better be nice to this person. They might be the mystery shopper. It did change behaviors. So I think if in terms of integrity, if people knew that your organization took integrity seriously enough to do mystery shopping or post-sale surveys or whatever, then those things are all good ways of putting integrity on the agenda.
Okay. Professor Assad, maybe you have a quick comment on this?
I think Kevin's response was very good, but my issue was to do with seeking information from private investigators on staffing. Okay, the reference is okay, but I've seen somewhere where people will put private investigators, they're hiring somebody in a very sensitive position, and the results can be quite interesting. So should that be acceptable? I think it should be acceptable. For personally, I see no problem with that. If I'm referencing a person I want to employ, then I should be able to hire a private investigator to raise for me issues that maybe I don't know. I don't know what other things about it, but for me, it's quite okay.
Presumably, Prasad, that would be quite expensive, so therefore would only generally be something for, as you say, sensitive, senior, like the new chief executive, you know, something like that.
Correct.
But, you know, I mean, I don't know how it works in real life, but you know, isn't to some extent that's what you rely on the recruitment consultancy. And I know there's a conflict of interest for anyone says, because of course they want to place the person, but nevertheless, I think when we've hired people, you are relying on the due diligence of the recruitment consultant to do as much background checking as they can. And I wouldn't think that includes a private investigator, but it would certainly include, you know, criminal records checks with the regulator, prior employees, you know, and as I say, let's be frank, the networks of people that you might go to. When I got my job, my job isn't that senior, but I know for a fact that the CEO here got in touch with my last employer personally, you know, and spoke to them to get like a personal flavor of what I was like, as opposed to, frankly, my CV, which makes me out to be brilliant and exceptional. You know, he wanted to get someone who actually worked with me his opinion. So, and I thought that was perfectly fair. He told me about it. He said, "Do you mind if I call?" I said, "No." And you know, but I'm not sure about, you know, private investigators, because if you felt you had to look at someone in that sort of detail, should you be employing them? I mean, that's the question. You know, if you thought there was a possibility that they hadn't done something, should that not be enough to put you off? Just asking the question. I'm not really positing an opinion. Ramasya, help me out by asking Dr. Jonah to comment now.
Maybe someone has something to add. Professor Assad, Dr. Jonah.
I don't know, but if it's really a sensitive position and I have issues I'm not sure about, I'll hire a private investigator and pay the price.
Would you tell them? Would you say that?
Yeah, definitely.
Yeah, you see, I think that makes a big difference, frankly. I think if you told the person, we are going to do deep background checks on you, then definitely. In my world, that is being open, honest, transparent, and fair. I mean, there was a story, this is on record, so I'll make it clear, alleged. There's a story that when the FCA started, you know, doing deeper checks on people who were applying for roles where you needed to be registered with them, that once people realized the checks were going to be made, a significant number of them withdrew their applications, you know, with the assumption that they knew maybe that actually they wouldn't hold up to investigation, or at least that's one assumption you could draw from that. That once they knew they were going to be checked, well, hang on, I better get my CV back because maybe it won't stand up to investigation. So I think if you're telling people you're going to do it, then it seems fair enough.
But Kevin, you know, the downside of it, if people withdraw applications, then the pool of people is going to be reduced.
Well, not necessarily, arguably in one sense, obviously in the short term, but perhaps it might attract other people in, you know, who a different sort of person. So, you know, I mean, you can't make an omelette without breaking eggs, a great cliche. But I mean, in all those ethical dilemmas, there's probably potentially a short-term hit to your business to do the right thing. You know, and again, that's when we talk about challenges, that's one of the big challenges, isn't it? Integrity isn't always cheap.
Correct. I agree.
Okay. If no one has anything to add, maybe we can go into, before we go into the closing remarks, let's now look at best practice from other markets. What happens out there? What lessons can we learn moving forward, and what we see as emerging issues as pertains to integrity and ethical practice? Maybe Kevin, I'll ask you to comment on this.
I think people are probably sick of my voice by now, but so I'll be really quick. There's a few sort of a few areas where I think the regulator, because you know, individuals are important, employers are important, and everything else, but I think the regulators do have a key role in terms of standard setting. And there's a few things that the FCA have done in the UK in the last few years, which are really around protecting the consumer. One is something called consumer duty, where they've done a consultation exercise, really making the point to businesses that it's one thing to comply with the rules. So, for example, about disclosure to a client of risks, or the one that was raised there about penalty interest rates, or you know, for defaulting loans or whatever, that sort of thing. It's one thing to be able to say to the regulator, oh, yes, we do that. It's on form 246, paragraph 7, tucked away in tiny, tiny letters, you know. So, yes, we comply. But what the regulators have asked businesses is it genuinely something that that the customer can understand and easily recognize? In other words, forcing businesses to really look at things from the point of view of the customer. So I've given the easy example of, you know, tucking away in jargon the rules in tiny letters, but actually saying that's not good enough. You know, it's not good enough to do it. You have to do it in a way that customers can readily understand. So it's an added level of trust, an added test. Another area is around the senior managers regime, where you know, there's been a push to really make people accountable. I mean, one of the facts about the financial crisis was not many individuals got into real trouble. Whereas the senior managers regime with the regulator really does give individuals within businesses specific accountabilities. So if there were problems, again, it'd be more difficult to hide. I think that's another, you know, important initiative. And the FCA also did some work around purpose, asking particularly, well, in all sectors actually of financial services, but asking businesses to look at, you know, what was their purpose? Were they, you know, I mean, that's a session in itself, but, you know, were they just there to provide a shareholder value? Who were they there for? Their customers, their staff, mix of all three? Who took priority? And it was quite interesting, actually. And I think there's a bit of a generational shift as well, in terms of perhaps younger people, perhaps looking for a bigger purpose than simply being part of a profit-making machine. But again, there'll still be people who want to be part of a profit-making machine and take their share. But you know, looking for something slightly bigger than just, you know, I make money out of my job. So the regulator's done that, and also diversity and inclusion. And this is a bit more controversial, but you know, in other words, looking at not just the way businesses are structured, their own staff, but also the fair treatment of customers. And that's going to be a very difficult area to have rules about. That's why I talk about it as being something under the heading of integrity, because surely it's the right thing to be fair to all segments of society and all different individuals. But you know, quite difficult to set rules or regulations about how you do that. So those are the consumer duty, purpose, diversity, and the senior management regime are 4 things that the UK regulator has worked on.
Okay, thank you, Kevin. Anyone with anything to add on that theme of best practice from other markets? If not, I guess we can go into. Can't see any additional questions from the panel. Let's go into our closing remarks. It seems we are out of time, and I'll start with you, Dr. Jonah. Just 1 minute closing remarks on the topic at hand.
Yes, lack of integrity can fracture the financial services. Everyone in the financial services is a practitioner in integrity. It is therefore important that everyone gives due attention to their conduct in public and also in private. Because without integrity, then we don't have an industry. Thank you.
Okay, thank you, Dr. Jonah. Professor Assad?
Thank you, Kimasia. Two important points. One, I think each of us are wired differently in terms of ethical structures. And we speak to ethics in our family and ethics in society. And you can't isolate ethics in financial institutions without talking about ethics in other areas as well. So very important is to make sure that we raise our kids in such a way that they are ethical. And that's very important. I mean, broadly, a lot of people are liars nowadays. With mobile phones, they tell you I'm here when they're actually not there. And kids will pick from that. So I think we need to raise our kids in such a way when they grow up, they're much more ethical. That is number one. Number two, I think our regulators need to recognize when they have lack of knowledge, and they do have lack of knowledge sometimes. About 2 weeks ago, I spoke with a regulator who I'm sure didn't know the difference between online learning and distance learning. And that for me was revealing. But I also know in our financial institutions, some regulators are absolutely ignorant of Islamic finance. And because of arrogance, they don't want to learn. And I think they should be open to learn Islamic finance so that they can regulate it much better. And that's the last thing I want to say. Thank you very, very much for this session of today. I've been very happy to be a participant and panelist. Hopefully this is going to happen much more in the near future. Thank you very much, Captain Marcia.
Thank you very much, Professor Assad. Kevin.
Well, I'm going to end briefly. Honest, open, transparent, and fair. Try and take that one away from today. There's been lots of other wise words, but they're not a bad mantra to have in your head. The fact that nobody agreed on the scenarios, remember that one, because that's real life to me. You think everyone in the room is pretty much on your side because you're a clever person and everyone must agree with you. But actually, that's never the case. Particularly the larger the room, the larger the group of people, the less common agreement you've probably got. And rooting that out by open discussion is one way to do it. And there's a lot of talk at the moment. We're doing a lot of work as well. I'm sure the other bodies represented around the table are in terms of ESG and climate risk and sustainability. Well, without integrity, financial services is not sustainable. So the climate risk, as it were, the CO2 risk to financial services is a lack of integrity.
Okay, thank you, Kevin. Goretti, we'll close the webinar with your closing remarks.
Okay. Thank you to everybody. I think this has been a very insightful webinar, even for me as a panelist. But I think our industry needs to stop. We need to stop and re-examine our commitment to this very important pillar, ethics and integrity. Globally, nations are thinking about financial inclusion. And it seems to be taking, it's very serious at that level. Within the industry, we probably think about it, but then there is the issue of profit versus purpose. I think it's very important for the industry to realize that if we regain trust, then we might be able to achieve financial inclusion goals and all the sustainability goals that we think about. Thank you.
Okay, thank you, great. That was beautiful. And with those closing remarks, we may now close the webinar. So yet again, it's certainly been a great honor and pleasure hosting you all today. And I'd like to thank our panelists, Goretti, Professor Assad, Dr. Kangogo, and Kevin for their very informative and useful insights on the topic at hand. And great appreciation as well to the TIOB, UIBFS, and the KIB for making this event happen. Very appreciated. And a big thank you as well to Fran, behind the scenes technical experts, for hosting the webinar. Very appreciated. We hope to see you again in our next webinar, the date of which will be communicated to you soon. Thank you again.